What's up, everybody? Real Trader Joe here, back with another market segment. It is August 15th, and the market rally is continuing. I believe we are actually officially bearish now on the stock market, even after all the nonsense. The VIX down to 1528. Look at that. I may do just a segment on this alone. The VIX spiked to 65 and is now all the way back down just after 15 days of trading. So really wild times here, and yeah, I was starting to feel the love a little bit on this ARM and QQQ net short position. Very thankful we added the short put in here to kind of pad things on the Qs here. We didn't do that on ARM, but I may go ahead and just pump the brakes. Depending on whether or not we get tested on the indices, I wanted that protection, but yeah, rally across the board here. CrowdStrike, AMD, Tesla, Micron, so definitely raking in some profit in the other portions of the tech sector here. So we're officially neutral, and our capital requirements right now is about 67%. So I will go ahead and adjust this ARM position just for capital perspective. We are reclaiming some buying power, with this adjustment here, which is going to be helpful for us. I'm going to see what the maximum adjustment would be, probably about 1,000. Yeah, that looks good. We give ourselves another $5 to the upside. We're going to add some bullish deltas. We're going to add some theta. We typically don't adjust unless we're tested, but this gives us a significant amount of buying power and keeps us kind of in that bullish camp. I'm a little wary to fight the bulls. If they want this uptrend here, so be it. ARM IVR down to 25 now, so we'll go ahead and take a fill here, turn this into a strangle, get ourselves some bullish deltas, some theta, sort of even out the portfolio a little bit. There we go, fell to $1. Okay, so yeah, ARM, pretty painful loser right now, but again, we're as of now, we're not actually tested on the new position. Gave ourselves a little bit more room, $20 or so to the downside, $10 to the upside, 23 theta a piece. So, and 36 days to expiration. So we've got some time to turn that guy into a winner. Our Coinbase position, really struggling here. The short put's doing what they can, but that 185 put that we paid the man on, not really doing very much for us. So we will go ahead and neutralize the deltas here. Did get kicked out of the platform temporarily, just logged back in, no big deal. I'm gonna make sure the stream's still good. Okay, yeah, we'll kick this coin short put out to about 480, give ourselves 8 deltas, 22 days to go. Not a whole lot of premium left in this short put, so we will close it out and give ourselves a little bit more credit, a little bit more delta, a little bit more theta. None of that can hurt. There we go. So now if you look at this position, the 64-day option is the governing option in this chain. We could have gone to 36, probably should have gone to 36. Let me see if I can actually maybe just put us in that cycle here. 150. Guess we can go to either one, right? 45 days, that's about 10 days. That's a little more than 10 days, but I'll go to the 60-day cycle here. Typically you want to stay within the 45-day expiration cycle, but we picked up some theta anyway, and we had to roll that guy out. So I'm all right with that. We'll pick up more credits. We'll reduce our cost on this diagonal here to $7 only. So $7 to make 20. Not bad odds at all. Now this option, of course, is going to suffer if coin continues to drop, so that is something to keep in mind. But across the board, the rally looking good. Our leap on Tesla is now sitting very, very comfortably. We'll continue to rake the theta in there, and I keep harping about this 350 call, which is now 100 theta a day. That is how quick this option is going to decay. We have 100 theta on it. earnings coming up here in just a couple days. We've got till the end of the week, and then Monday after hours. So we sold it for 2. It's now worth 13. It's pretty unlucky with the ramp up we had. I mean, look at this. Wow, 304 to 343. What a tear this has been on. You know, flirting with the previous highs here. 345 is resistance, so we're right about there. And wow, I mean, what an opportunity here you had to buy Palo Alto at this support level here, all the way back up after that dip. So we'll see. AMD, CrowdStrike, Dell, all performing rather well. I'm happy to just bask in the bullish profit. And, you know, our Q position did go negative here. That's to be expected. We have about $7 left until we hit the short call leg. But our short put is almost entirely obliterated here. Wow. I mean, I did a short call, but thank God we sold this short put to give us $300 on this trade, because we would be losing on the call side. And just to keep in mind, guys, we sold this call way down there. So, yeah, we opened up this short call on August 5th. So, on August 5th, the Qs were way down here at 442. So, we've withstood almost 40 points of price action to the upside. Definitely volatile times, but I think I'm fairly happy with how this has gone. Very tempted to check my profit for the day, but I usually don't have that up because I don't want that to influence how things are going when I'm doing my adjustments. So, you know, I could check my profit after I've adjusted for the day, but that's just one of the rules I have for myself. I typically don't check any of my profits, you know, during the adjustment period, just because I don't think that's a recipe for success. So let's see. Yeah, I mean, at this point, we are looking to unwind winners and mitigate losers. Micron almost at the 105, 110 threshold. It's a pretty tight inverted strangle, but we're still able to profit $5 in either direction. So our real threshold here is going to be from 100 to 115. So we are within the bounds to be profitable on this Micron trade. And we're sitting really peachy here. 6 deltas, 13 theta. We're going to continue to let this position work for us. And what a storm we have withstood. I mean, we've been rolling this guy since June. In June, we put on the 115 put, which still is not profitable, by the way. If you put the 115 put on, you were in some serious pain just a couple of weeks ago at $90. So, wow, I mean, this is just a testament to the power of short options, that we're able to pretty much bring ourselves back into the profitable zone after all this time. I mean, if we had been just long stock at 115, that would have been pretty painful. Not only would we have been underwater all this time, we'd still be underwater by about $12. So on the options, we're down 960. If we were long stock at 115, we would be underwater about $12. So you know, $1,200 on 100 shares. So not only are we losing less, we're continuing to improve our position with each day that passes. So I'm very happy with how this has turned out. Tesla rallying nicely here in our favor. Of course, you know, there's an argument that we could have kept the 200 in the 70-day cycle, but I didn't see a need to, for all the reasons that we discussed in a previous episode. I'm happy to sit on this leap here at 135. I'm happy to own Tesla at 135. In my mind, this is an ownership play, right? If Tesla gets to 135 and I get assigned, I will pay the money to own the Tesla stock. So I'm not too concerned about the theoretical profit and loss on this position. Dell obviously going to be a much different story. Look at this. We're almost in our 110 bound here for the December cycle. Now, you know, obviously earnings in 15 days could mess this up, but I'd be happy to just get both options back in the money again and give ourselves a little bit more latitude. We have $20 on this spread with a $15 wide intrinsic value. So 110 to 125, 125 minus 110 is 15. We've collected $25, and we'd have $15 of intrinsic value if both of these options were in the money. So our real profit zone here is between 130 and 105. So we are now in the profit zones for both Micron and Dell on these inverted strangles. Coinbase, you know, I mean, we have a massive amount of short theta in the portfolio right now. 94, that's just call that 100. Just for easy math, that's 25, 25. So that's 150 right there, 160, 165, 175, 180, 190, 200, 207, 210, 215. We have about 215 short theta right now. Vast majority of that coming from this very close to expiration 350 short call, which may end up in the money. But, you know, like I said, Palo Alto hits 350. More power to you. Because, you know, if we get assigned on this short call, you could pretty much think of this minus 1100 as just going away. That just vanishes into dust, and we keep the premium. So we need Palo Alto to get to 352 for this to really hurt us, and I will happily, you know, take the money. This value here is all theoretical. We still have 8 days to get to 350. We may not even get to 350. We may only get to 345, or maybe they don't do well on earnings and it totally plummets. But if that's the case, you know, we do have some decent downside protection, being long 112 shares and being short 45. So I may even roll this out in time, closer to earnings. We roll it out in time, we pick up some more bearish deltas. We are going to lose a lot of theta for that, but we have options available to us, no pun intended. We can obligate ourselves to give it up at 350, collect even more protection, 435 a share, so we would be protected, or, you know, in increasing the value of this option. Or, yeah, and this again would add a little bit of bearish delta and somewhat insulate us from a downside move. Or we can say, you know what, I'm going to roll out to 360. I'm going to allow myself $10 more to the upside, collect 78 cents a share or 81 cents a share, which is just phenomenal. This rally right now really doing some good stuff for us here, and yeah, the arm strangle is working out fairly favorably. I am very happy with how the portfolio is going, despite all this red, you know, but it's been an adventure. I mean, if you look at the Qs, right, if you look at QQQ, this is a nightmare for any options seller, this level of price action and volatility. If you were long in May, you were happy until July, where presumably you'd continue to be long. Then if you were long here, you got really punished. And then if you were short here and you thought the end of the world was coming, you're in pain again. So there's a world in which if you're long, you're not happy. If you're short, you're not happy. And this may just be a lower high. We may be going into a situation where we're either going to give this gap back up or continue lower. So nobody knows what is going to happen. Nobody knows. And that's why right now I haven't been putting a lot of new trades on, with the VIX back down to about 15, and my portfolio is still overutilized from the VIX move. I'm not placing any new trades on. I'm just adjusting. Right now, we're just trying to unwind ourselves and, you know, get to a better position. But I would imagine my profit for the year is just about back to even, having capitalized on all that VIX movement. And wow, I mean, what a journey that's been. I woke up at the lake house with minus $11,000, and I'm sure I'm above. I've got to be profitable today, somewhat. I mean, I know I had a somewhat bullish portfolio going into today. It looks like the NASDAQ up about 1.34, and Dell probably gonna stay in that range here. So, you know, NASDAQ, ES, the Russell, I wonder what the Russell 2000, yeah, even the small caps are doing well. They're up 2%. So, yeah, I mean, now our days to expiration are not the best. I mean, we have the majority of our portfolio in the 64-day cycle or less, which is good, but I would prefer these contracts be in the, you know, the 36-day cycle. That's okay though. You know, sometimes you have to make rolls out to those longer dated expirations, especially when you're tested and you have to reduce exposure. Exposure comes before everything else, or deltas, because you know that's your risk. So if I'm offered a choice between keeping my current exposure and staying in the current cycle or rolling out in time on the tested side, I'm gonna roll out every time. When you roll out, you know, you decrease your exposure. Sometimes you recapture buying power. You're going to usually give up theta, but you know, theta and the present cycle, I think, are secondary to controlling risk. Controlling risk is probably the #1 variable that I look for. So I keep what I can in the current cycle. If not, I roll it out. Dell and Tesla are kind of extreme cases. Dell just having this nightmare of a time, you know, obligating ourselves to buy it at 125 from 178, mind you. So it was at 178 or so when we put this trade on. Then it tested our 125 strike. Let's see. Sorry, 135. So I sold on May 24th the obligation to buy Dell at 135. When Dell is at $160 and rallies to $180, you'd think 135 is pretty safe. Nope. Immediately just, you know, whops on down to 131, a low of 131, sort of rallies back up, and then just plummeted. So, with all that action, I'm really happy with how this position is shaping up. We've collected a ton of credits, we've done our rolls, we've done our adjustments. Even if the expiration cycles are pretty long, I'm happy to just wait out this chop, because it can't get any worse than it. I mean, not that it can't get worse than it was, but we were in a really bad spot with this adjusted strangle with Dell at, you know, 86, 85. So if we're right back down there and we took that kind of punishment, we can take that kind of punishment again. My fear actually now is that Dell rallies back up to our initial short strike, and that would just be a nightmare because then we'd be fighting Dell to the upside. We're not there yet. We still have 9 long deltas, and I don't know. I mean, Dell with an IVR of 73, I may look to just, I don't know, maybe I shouldn't get cute with this, but I'm very tempted to go in here and just collect a little bit more. The only thing is that would be obligating us to, again, be exposed to the downside. And since we have so much downside exposure already, I don't think that's a prudent move. But I am tempted, very tempted to go in here and place a pre-earnings Dell trade. Just curious if we close this out. Not that we're going to, but yeah, if we closed it out, we'd get about 2,000 in buying power left. And you can see here the expected move in the 128 7-day cycle still to the downside. You know, the market's still pricing in that Dell's either going to go to approximately 135, which would not be the end of the world for us, or $80, which again is not a scenario we want to find ourselves in. So yeah, the Q's really rallying here. You know, and if we hit 479, we will adjust. We'll adjust per the Tasty Trade mechanics, hoping that maybe the Q's take a little bit of a break over the next couple days. That would give us, you know, this 350 call on Palo Alto would really get a bit of a breather, and our coin position, we're still short coin, but you know, this 150 put, we're gonna keep ticking away. We took a pot shot at the bearish move. It didn't work out, but we've really managed to reduce the basis and sort of reduce the injury on this position. So just keeping the overall positive theta, that's what it's about. We are going to lose theta as we continue to go closer to expiration. You can see it says we're at about -2. Our date's wrong. No. Oh no, do I have delta selected? Yeah, that's why. Okay. There we go. Positive theta, and all's right with the world. We are going to lose theta as we go closer to expiration on those longer dated options here. You can see theta just decreasing. This bottom axis represents theta here. So as we continue to get closer and closer to expiration, you can see the theoretical theta becomes more negative, and that's to be expected. Because as we get closer to expiration, our max profit on these positions is going to be determinant for this move. But again, the short put we sold, you know, it's already doing some serious work. It's already absorbing $33 of this -$100 move. So just continuing to utilize theta and utilize short premium to put ourselves in the most advantageous position possible. I don't have any new trades for the show, but things I'm looking for going into the weekend. As I mentioned, the NASDAQ broke through this level of resistance here. It's just a pretty rudimentary level that I have on my chart, so we're bouncing. But the overall trend still bearish in the short term, and this may just be a rally. This may be a rally from a complete rout, and then we may get a further drop. I'm going to be especially wary of my portfolio allocation heading into September, October, November, heading into the election months, because we are getting to that point. 60 days from now is approximately when the election volatility is going to start to kick off and stuff like that. So, yeah, CrowdStrike is probably going to be a winner here. Look at this $20 option now worth $3. So we again withstood that whole storm. We withstood all this price action, 380 to 360, all the way down to 201 or 200. So we rolled that out in time, and now back up to 260. So we will see what happens. Other than that, guys, I don't have anything else for you. If you like the show, please feel free to come back. If you have other suggestions on content you want to cover or specific options mechanics you want to see, let me know. Until then, I'll see you.